Okay, I'm not sure how far you guys are with your studies, but we'll be doing Learning Unit 5. It's a French benefit. All right, the French benefits, we dealt with it before, but it's actually, we touched based on it. I can't say we could deeper in it. So today it's where we're going to get deeper in it. And then everybody else will be able to see or understand what the French benefit is. Right, looking at our intro here, it says that it refers to a non-cash benefit granted by the employer to the employees, in addition to their normal wages and salaries, but do not constitute the cash payment. Basically, it's a benefit that you get from employer, but which doesn't constitute like a cash payment. Okay, so this is what happens. Usually, you'd find out that, for example, I'll give you an example with regards to the medical aid. Sometimes the employer pay a certain portion, and then you pay the other portion. Let's say your employer is paying 60% towards your medical aid, and then you pay 40%. The 60% itself, it's actually defined as a fringe benefit. Agree? Right, and we going forward, it says that a taxable benefit is a taxable benefit that shall be deemed to be granted where an employee is granted the right use of any motor vehicle for private or domestic use. So there are employees who get the right use of the company car. That is also defined as the fringe benefit, but we'll see the treatment as time goes along in this content today. Right, and then let's look at the exclusions. So the exclusions, it excludes the cost relating to the license or the insurance and maintenance or the fuel in respect of the vehicle. So these are actually not defined, or they are not classified as a fringe benefit. Again, the value of the fringe benefit cannot be reduced to where the employee pays for the full cost of the license, insurance, maintenance, or private fuel for that vehicle. So, and the other one says that the value of the fringe benefit can, however, be reduced by any consideration paid by an employee for the use of the vehicle. A claim for the full cost actually incurred by an employee for the private purposes will be calculated on an assessment by applying the prescribed rate per kilometers to the kilometers traveled for the private purposes. So this is basically what happens. Usually when you've got the company car, for example, they are going to look at what's called, I think you will see that when we do the traveling allowance, where you're going to be given the total kilometers to be traveled, and then we're going to look at how much was for the business kilometers and how much was actually for the private purposes. And then obviously we're going to look at the table in terms of how much does the car weigh and the wear and tear, stuff like that. But I think we've got one of the comprehensive example at the end of the learning unit. We'll do that. Right, and it further says that the value of the taxable benefit shall be calculated on a monthly basis for each part of the month during which the employee was entitled to use the vehicle for private purposes, including the traveling between the employee's place of residence and work. Sorry, I think I forgot to. Right, let's look at what the rates entails, which says that the rates, the right of the use of the company vehicle can be taxed on. So we have to abide or comply by 3.5% per month of the determined value of the motor vehicle. That's when it's actually pure, no inclusion of anything. And then we've got 3.25 per month of the determined value of the motor vehicle if it is subjected to maintenance plan, which covers the service of the vehicle. So the key issue there should be the maintenance plan. If there's no maintenance plan, that means you need to comply with the 3.5%. If there is a maintenance plan, that's where you have to use a 3.25%. And the seller will cover the maintenance of the vehicle for a certain period, usually it's 3 years, or to a kilometer limited to an instance of 60,000 kilometers have been traveled by the vehicle. Right, so usually even under your own vehicle that you're not given by the employer, so we know that it's limited to 60,000 rands, or the maintenance plan is equally limited for 3 years, so you have to opt for the two when you are doing the high purchase. Where two or more employer owned the vehicle are used at the same time, and the commissioner agreed that each vehicle is primarily used for the business purposes, right? That's actually in compliance with the rates above. And the value of the private use of all the vehicle will be determined using the value of the vehicle having the highest determined value. Looking at the cost there, we're going to look at the bigger value. So the determined value, can we just go down? The determined value for the company car is the cash cost of the vehicle, including the VAT, excluding the finance charges and the interest rate. So meaning that if you determine the cost of the vehicle, you're going to exclude the finance charge and the interest, but it would include the 15% of the VAT. So in some instances, the determined value may exclude VAT. Where applicable, the determined value may be reduced by 15%. If the VAT is actually not applicable, in some instances, then it does not have to be included. So no value is placed on the private use of the company-owned vehicle if it is available and used by all employees. So it has to be specifically for one employee. The private use of incidental in the vehicle is not normally kept near the employee's residence or used outside the normal business hours. So if everybody else is actually entitled to use of the car, let's say finance department or accounting department or the HR department, wellness department, everybody else can just use the car. There's no way we can actually use this thing. We can apply what's called the private use of the company car. It has to be for a specific person. Okay, so the employees, okay, which is all used outside the normal business hours, the vehicle is effectively a pool car. If it's used by many, it will be regarded as a pool car. So I forgot to explain that rather. The employee's duty requires regular use of the vehicle for the performance of the duties outside the normal hours of work, and the private use is infrequent or incidental to the business use. Okay, if the employer acquired a vehicle, the right use of the vehicle, of the motor vehicle, 12 months or more than the date in which the employee is granted the right to use of the motor vehicle, the depreciation allowance must be deducted from the value of the motor vehicle as actually determined. But we all know that those that do accounting, they know that the asset of the company, specifically for the motor vehicle, when they are in use for the operations of the business or for production of an income for the business, we need to calculate what's called the depreciation. So the depreciation in tax is called the wear and tear. So in accounting, we call it the depreciation, but in tax, it's actually called the wear and tear. So it cannot, it's not always specifically for 12 months period. It can be for 4 months, depending on the year of assessment as to when is it ending and when was the motor vehicle acquired, given to an employee. So it can be in any period exceeding 12 months or less than 12 months, but you have to calculate the wear and tear for those period that the vehicle has been in use by that certain employee. The allowance is calculated according to the reducing balance method. I think they're very specific with regards to the method. So at the rate of 15% for each completed period of 15 months, 12 months, from the date on which the employers first obtained such vehicle or the right use thereof to the date on which the employees was first granted the use of the vehicle. So we know in accounting what happens is they give you, the company decide on what rate are they going to use. So here they are being very specific that we have to comply with the reducing balance method and at a rate of 50%. So in accounting, you can use the units production method or you can use the cost model method. However, wherever it's applicable to, if you change it, for example, then you need to actually disclose that as part of your notes. But in here, they're very specific. You need to use 15% according to the reducing balance method for a completed 12 months period. So that's what they are saying. Okay, got a little example here. Right, the examples that I have here, I'm just going to do them on my own, but the last one, I'll just try to actually do it with you, right? And before I get to the example, is there anybody else who needs clarity on before I go further? So we're going to tackle our example, which is example 5.4. All right, example 5.4 goes this way. It says a retail company acquired a new motor vehicle with an amount of 320,000 rand on the 1st of March 2019, including the maintenance plan for 3 years or the 60,000 kilometers. The employer was granted the right to use the motor vehicle to Vui on the 1st of March 2021, and the vehicle was used by another employee before Vui. Is that what the required says that calculate the taxable benefit for the private use of the motor vehicle that needs to be included in Vui's gross income for the 2022 year of assessment. So you must always bear in mind that we are actually doing what's called the fringe benefit. Okay, so first thing first, we're going to determine how much is the cost of the vehicle, and then we're going to adjust it with the wear and tear based on when was it acquired. All right. So looking at the question here, a cost. All right, first thing first that you must just do, I hope you guys can see my workings. So you're going to determine how much is the cost of the vehicle. When you look up there, they say that the cost of the vehicle is 320,000 rand. Then you're going to show me how much is the cost. So you just say 320,000. Let me just delete this underline. Right, and then we need to calculate the wear and tear. The wear and tear would be when is the year of assessment and when was the vehicle acquired. It was acquired on the 29th, and our year of assessment is 2022. Right, so this is how it works in tax. The year of assessment is always on, for salaried employees, it's always on the 28th or 29th of February every year. Okay, so this is how you're going to calculate your wear and tear. The wear and tear would say wear and tear, wear and tear. So you're going to say my cost minus my cost with the reducing balance method. So you're actually going to say 320 multiplied by, remember our rate is always on 15%. Sorry, I said 32,000. Let's just say 320,000 multiplied by 15%. So I just want to calculate this quickly for you, just a moment. 320 multiplied by 15 divided by 100. I've got my wear and tear of 48,000 rands. Okay, so that's actually on the 2019. Then we're going to look at the 2020. The 2020 would be the same amount, wear and tear, and it's going to be 320,000, and then you multiply this by 15%. Then it's going to be the same amount of 48,000. Right, and then you're going to determine how much will be the taxable benefit in 2020. So it's 2019 to 2020, 2020 to 2021. And then we're going to calculate the taxable benefit in the current year. And you're just going to say your carrying value should be 320 minus 48,000 minus 48,000 again. So it will be 320 minus 48,000 minus 48,000. So you should have the taxable benefit of 224,123. Right, we've been specifically told that this vehicle has a maintenance plan, or it includes a maintenance plan of 3 years, or it's limited to 60,000 rand, sorry, 60,000 kilometers. So basically what you're going to do is, we know that if we've got the maintenance plan included, we're going to apply 3.25. And then we're going to look at how long was it utilized for in the current year. It's full 12 months. And then what you do, you would say 224, 123 multiplied by 3.25 multiplied by 12 months. Okay, so what you're going to do is 224,123 multiplied by 12 multiplied multiply by 3.25. But that is a lot of money. 224.123 multiplied by 3.25 divided by 100 multiplied by 12. So you should have a taxable benefit of 87,360 rands. 87360. That should be your taxable benefit. Let me see now. It's 2, 7. I just want to check if I made the right calculations. It's 320 multiplied by 15 divided by 100. 8. Okay, sorry, the carrying amount will be 272. You made a mistake. Multiplied by 15 divided by 100. So you'd say minus 272, 123. So it's 231, 200. My apologies for that. And you made a mistake. All right, so this is basically what happened in the first one. You're supposed to say 320 multiplied by 15 divided by 100. It's 48,000 rands. That's fine. And then you say minus 320,000. So it's 272. That's 272,000 multiplied by 15 divided by 100. So it's 40,800 rands. My apologies, I made a mistake here. It's supposed to be 40,800. Okay. So you'd say 272,123 minus 40,800. So it's the taxable benefit amount will be 231,200. And then you will say 231,200 multiplied by 3.25. Right, and then you divide this by 100. 231,200 multiplied by 3.25 divided by 100 multiplied by 12. So it should be 90168. That should be your taxable benefit after adjusting the weight here. 90168. That should be your final figure. Okay, let's see. Kalina, you're welcome. We need clarity on the first one that we did. Who is not happy? Are we all happy?
No, I'm not.
Okay.
I'm not happy. What happened? Yes.
Okay.
The second way and say, how does it become 40800?
Okay. So let's see. I'll explain that now. Is it Dineo or is it Amanda?
The one that asked the question is Amanda, but I wanted to ask the same question as well.
Oh, okay, no problem. Let me answer you both. Right. In the first year of our went here, we said 320,000 multiplied by 15%. It gives us 48,000 rand, right? Are we all there? Are we all clear on that part?
Yes.
Okay, cool. So
yes.
Since well our went here, it's actually 48,000 rand. What you're gonna do is you'd say 320,000 minus, I think it's because of maybe I didn't show that, 48,000 rand. So the carrying value here, carrying value, it will be 272. That's the difference between 320 and 48,000. 272, 123 is 2. And then what you're going to do again, you will say 272,000, 123. You multiply that by 15%. Again, it will give you 40,800 rand. Does that make sense?
Yes.
All right,
yes,
the cost minus the wage is the carrying value is 272. If you say 320 multiplied by 15%, it should give you 48,000 rand. And then the difference between 320,000 minus 48,000, it will give you 272,000 rand. That's your carrying value. Okay, and then what you're going to do again is, let me just delete this. I think maybe I made a mistake by showing you this one. 272,000 multiplied by 15%, it should give you 40,800 rand. And then if you say 272,000 minus 40,800 rand, it should give you 231,200, which is actually the new carrying value in the 2021 year. So it's your taxable benefit because that's where it actually ends, but you can still say it's the carrying value. So what you're going to do now is you would say 231,200 multiplied by 3.25 because of the maintenance plan is included. And then it's actually for the current year, full 12 months. That's 90,168. Are we clear? I can explain it again if you want it.
Yes, we are clear.
Okay, Dineo, you're clear. Amanda, are you clear as well?
Yes, thank you. Yes.
All right, thank you very much. And Kalina, are you okay?
Yes, I'm fine. Thank you.
Thank you and welcome. All right, I'm going to move on since everybody is actually clear on this one. So there's a second one here, the example which says a motor vehicle dealer acquired a new motor vehicle for 275,000 rand with a dealer billing price, including VAT, on the 1st of January 2019, including the maintenance plan for 3 years or 60,000 kilometers. Employee A uses the vehicle for 30 months from the 1st of January 2019 to the 30th of June 2021. Where after the right. All right, first thing first, so you're going to determine the determination of what's called the cost of the vehicle is 275,000 rand. Can you all see that? That's actually the first part, and then you are actually going to do it for. Let's look at the employee had the right to use the vehicle for 30 months, but it has been split into employee A and B, right? So let's look at how long has employee A had it and for how long has the employee B had it. Employee A uses the vehicle for 30 months from the 1st of January 2019 to the 30th of June 2021, where the right of the use was granted to employee B. Okay, so calculate the taxable benefit for the private use of the motor vehicle that needs to be included in employee A's gross income and employee B's gross income for the current year of 2022. Right, so basically this is what you are actually going to do. Then you say if you look at the question there, even though it's actually not specific, it says that employee A only had the usage of the vehicle was for full 30 months, split it into employee A and employee B. But employee A had only the vehicle for about 6 months, and the remainder of the months were only utilized by employee B. Right, so this is how you are actually going to approach the question. You're going to say employee A, the taxable benefit for the employee A, it will be, because the employee A used the right to use the vehicle for 6 months, it will be 275 multiplied by, remember the maintenance plan is there, 3.25% multiplied by 6 months. This is how you're going to show it. Taxable benefit for employee A. We'd say the cost is 275 multiplied by 3.25. Remember, that's actually for the maintenance plan, and this person had only the usage for only 6 months period. Then you would say 275,123, and then you multiply that by 3.25 divided by 100. When you multiply this by 6, it should give you a taxable benefit of 53625. Okay, let's see. Right, let's see what employee B says. So the employee B received the right to use the motor vehicle for the full 30 months after the employee used the vehicle for that 6 months. Therefore, the determined value needs to be reduced by 12 months, true 12 months. So your determined value, you're still going to comply with the same amount of 275 as the cost and the wear and tear of 15%. And you're going to do it for the second year. Or basically, this is what you're going to do. Let me just show you quickly. Say the cost, the same amount, 275, and then you'd say you went here. First year, 12 months. Okay, you'd say 275,000 multiplied by 3.25%. And then, sorry, I think I'm using my cloth there, which is 15%. So you'd say 275 multiplied by 50% divided by 100. That's 4125. Just be careful because we had it in the previous question where I think we were just a bit lost in regards to how we got to the carrying amount. Okay, carrying amount equals 275 minus 41250. Okay, over 233,750, and then you're still going to calculate when here. When here for the second 12 months. So you're going to say 233,750, 233,750 multiplied by 15 divided by 100. So it will be the went here is 35063. So it's a 3506 2.5. So I'm going to round it off to 3. Then you simply say you minus 233,750. That's 198,688. That's the table income or the new carrying value. Carrying value. YD 198,688. Okay, I just want to clarify this whole thing now, but I just want to explain something before we finish off. 3. Seems like my first amount doesn't. I think this people being probably 275, 240. 15 divided by 100, 412. January, December, and 225. Okay. 19. So remember that employee B used it for 6 months. Sorry, for 13 months. So it's going to be 12 months, and the remainder will be the remaining 6 months. And then what you do with the taxable benefit, you just say 198,688 multiplied by, this thing is hiding this thing. So far you must be aware of why am I using 3.5%. Then you multiply this by 6 months. That's the remaining 6 months period. $198,688 multiplied by 3.25 divided by 100 multiplied by 6 months. So you should have a taxable benefit of 38744. 16, so we can't actually round it off. All right, people, let's pause from this one. I just want to clarify something so that this thing should be easier for you when you are approached up with this kind of a question. When you are faced up with this kind of a question, the first thing that you must actually encounter in your mind is the cost of the vehicle. How much is the cost of the vehicle? The second part is the wear and tear, right? The third part is the term. For how long was the vehicle used by an employee, right? And the last one, you should know as to whether it's including the maintenance or it does exclude the maintenance, because you don't need to be confused as to whether you're using 3.25 or just pure 3.5 percentage, right? First and foremost, cost. Secondly, for how long has the car been utilized? It will help you to determine the wear and tear, right? That will be your third part. And the third part, that will be your taxable income. That's where you have to know that you're including the 3.25 or the 3.5. So, but in most cases, they don't give you the longer years. Usually what they do is they'll just say it's actually in the current year, or they'll just give you full 12 months period. So here they're just giving you a step-by-step just to know on how you're going to derive at your final answer. Am I making sense? So it's actually not that hard as it may appear, or it may actually look. You just have to look at two things. So even one thing that I can advise you on is look at the issue of, is there maintenance or is there no maintenance? Because in most cases, especially when you're writing an exam, the wear and tear part is actually not there. But if it is there, you must always make sure that you're doing how to calculate your carrying amount. The carrying amount at the end is actually your taxable income, and then you just adjust it with 3.5 or 3.25. Sorry about that. All right, go to your study guide. When you approach learning unit 5, the French benefit, you will find this kind of questions. Make sure that you do them without looking at the solution. And then afterwards, you can just go to the solution and see if what basically went wrong. You understand? So I'm going to be available on my WhatsApp. So people like Alina, they know I'm always available. I'm responding as and when I do get the questions, if I am actually available. And then if I'm not available, I'll tell you that I'll get back later back on to you, should you get confused. All right. Sometimes when you do this kind of questions and the figures are actually not corresponding, it's not probably you. It will probably be the issue of maybe they made an error when they do the calculations on the study guide. Do not be confused about the two. Rather know your principles before you can get to be confused about what's actually letting you study. I'm not saying that do not rely on that. Okay. So I'm gonna be, before I move on to, I think we'll be done with this one just now. Let me just open up a question. Amanda, you sorted? You know why you sorted?
Yes, so far
Yes, I am.
All right, thank you very much. For the next subtopic, it includes the meals, refreshments, and vouchers. So there's probably no question in there, but I think I've got a question at the end of the learning unit. Yeah, there's definitely no question. I'm just going to give you a theoretical view of facts under this part. Right, where an employee has been provided with any meal or the refreshment or voucher entitling the employees of any meal or the refreshment, either free of charge or for the consideration which is less than the value of such meal, refreshments, or the voucher, the cash equivalent is the cost of the meal of the employee less the amount paid by the employee. Sorry, the cash equivalent is the cost of the meal to the employer less the amount paid by the employee. It's actually one of those easy things. You just look at how much did you pay as an employee and how much was actually paid by an employer, and then you're going to be taxed based on that one. Okay. There is no taxable benefit in the below cases. So any meal or refreshment supplied by an employer to an employee in the canteen, cafeteria, dining room operated by or on behalf of an employer. If there's a canteen or a cafeteria or a dining room in the building where you are actually working, there's no way you can claim a taxable benefit. It has to be out of your employer's premises. So any meals or the refreshment supplied by an employer to any employee during the business hours or extended working hours on special occasions. So any meals or the refreshment enjoyed by an employee in the course of providing a meal or the refreshments to any person to whom the employee is required to entertain on behalf of the employer, or in meals provided with an accommodation. Right, so that's as easy as it is. Residential accommodation is quite an interesting one. It says that where the employer has provided an employee with a residential accommodation, either free of charge or for rental consideration, which is less than the value of the accommodation. The employer owns the residential accommodation. The fortunate part is we have to comply with a certain formula. It says that A minus B in the brackets multiplied by C divided by 100 multiplied by D divided by 12. So it's a standard rule. It's a formula that you have to follow all the time. So the easiest way to know this thing, you just say A, B, C, D. So A minus your B multiplied by your C divided by 100 multiplied by your D divided by 12. So it should be easy, getting used to it, but it's always there in your book or your study guide whenever you need that. Let's look at what A entails. It says that is the remuneration proxy received in relation to the previous year of assessment, excluding the residential accommodation and the use of the motor vehicle. B, it's a standard amount. It's 87,300 rand or nil if the employer is a private company and the employee controls the company, or the employee has an option to become the owner of an accommodation. C, it's 17, 18, or 19. And this is how it's actually differentiated. It's 17 if it only consists of 4 rooms. Sorry, it's actually 17 if it's only rooms for nothing. Or it's C if it's at least 4 rooms or more, furnishing or electricity supply. Meaning that it's 18 if you've got those rooms. It's either you're going to be furnished or you are actually going to be supplied with electricity, one of the two. And then C, it has to be at least 4 rooms, and it has to have both the furniture and the electricity to be supplied. Does that make sense? 17, nothing. 18, it's either you've got a furniture or the electricity supply. And then 18, it's the rooms, it's furniture, is the electricity that has been supplied. And that's it. D, we're going to look at the number of months the accommodation is used in the current year of assessment. So usually they would give you 12 months, but if it's anything less than 12 months, you just say, let's say it's 5 months. So you just say 5 divided by 12. And then you are sorted. That's how you're going to look at the residential accommodation. I think I've got one of the examples down there. We'll see on how we are going to approach it. All right, it says that remember that B, it's a fixed cost given by the legislation as per the income tax, and therefore the amounts need to be remembered and land. So remember that B, it's 87,300 rand. You do not have to come up with your own amount. You must specifically and always use that amount. Do we agree? So if the employer does not own any residential accommodation, it says that where the employer does not own the residential accommodation, the equivalent, the cash equivalent will be the law of the amount determined in terms of the formula and the rental paid by the owner. All right, speaking of that, I've got a little bit of an example here where it says that Bianca is a director and a shareholder of the private company, owns 50% of the shares in the company. Tatleo has the free use of an accommodation rented by the company, which consists of 10 rooms. The company pays 6,400 rand per month to rent the accommodation. The accommodation is unfinished. That's a key word. And Katlego needs to pay for the water and electricity. Each month, Bianca used the accommodation for the full current year of assessment. So you don't have to worry about 5 months, 6 months, and stuff like that. Immediately when they say full current year of assessment, it means that it's full 12 months, right? Bianca's remuneration proxy for the previous year of assessment is 650,000 rand. Required, please calculate the taxable benefit from the residential accommodation that needs to be included in Bianca's gross income for the current year of assessment. First thing first, when you are actually looking at the residential accommodation, the first thing that must kick in your mind is the formula. You understand? So the formula says that it's a standard formula. It's A in the brackets minus B close brackets multiplied by C divided by 100, and then you multiply that by D divided by 12. Let's go now. All right, you just say residential or taxable benefit. Let me just use taxable benefit. For the residential accommodation. Right, formula in use. Just a moment. Formula in use. Okay, it's A, the open brackets, A minus B, close brackets, multiplied by C, divided by, with my division, divided by 100. Then you multiply that by D, divided by 12. Right, now let's analyze what are they saying here. Sorry. A, it's actually the proxy of the remunerations in the previous year. So it means that your A should be 650,000 rands. So you're going to open up the brackets. And U minus B, you remember 87,500, 87,300 rand, that's the standard rule. And then you multiply this by, how much is C? C, because we don't have the furniture, we only have the accommodation that consists of 10 rooms. It's unfinished and there's no electricity that has been paid. It means that you're going to say 70, you divide this by 100. And then remember it's for the full year. So you say 12 divided by 12. I'm going to give you the final answer quickly. The final answer would be 650 minus 87,300. It's 562,700, and then you're going to say multiply by 70 divided by 100. You made a mistake. Wait. 650 minus 87,200. 562,700 multiplied by 17 divided by 100. It's 95,659. So if you multiply that by 12, you divide it by 12, it's like you're multiplying that by 1. So your final answer should be 95659, right? So there was a rental that was actually paid on a monthly basis. So it will be 6,400 for the full 12 months, because this person has stayed here for full 12 months period. Remember, we have to take the lower in between the two. You can say 9, my apologies, 6,400 multiplied by 12, 76,800 rand. So let's look at the difference in terms of the taxable benefit minus 76,800. 76,800 minus 95659, 18,859. But the smallest, the lower is 76,800. Let me just confirm quickly about the lower part. Just a moment. Residential accommodation. Just a moment for me. Just want to check my theory quickly. Yes, that was correct. So you just have to take the law of the two. So the law of the two to be considered 76,800 rand. Okay, open up for questions now. We need clarity on this. Let's see. Dineo, are you fine? Amanda, are you all right? Hi, Labuhang, and welcome. Okay, Dineo.
Yes, I am.
Okay, Labuhang, I think you caught us in the middle of the question, if I'm not mistaken. How comfortable are you so far? Labuhang Poto.
Yeah, I'm okay, sir.
Are you okay? So we're doing the residential accommodation question. Are you fine with it?
Yeah, yes.
All right. Thank you very much. So it means that now I can move on. Okay. Okay, I've got a lower interest loans. That's one that I have to, I'm afraid that we might be running out of time because we've got a travel allowance to tackle. But we'll squeeze it in. What low interest loans? If an employee borrows money from his or employer, fringe benefit arises if the employee's charges less than their official interest rate. So if the official interest rate, let's say, is 10, and the employer charges about 5, that's where the fringe benefit comes into play. And then we do hear about these things where, especially the public CO companies, where they offer their employees a loan at a lower rate than the official one. Right, a rate of interest used by the commissioner for the purpose of calculating the termed fringe benefit of the low interest free loans. So the value of the fringe benefit is determined by multiplying the amount of the loan granted with the difference between the actual interest applicable to the loan and the official interest rate. So basically what you do is you just take the loan and then you multiply it by the difference of the official, they will give you the rates, what the employer is actually giving out, and then what the official rate is. So you're going to take the official interest rate, and then you're going to deduct the difference between the official interest rate and the rate that the employee is actually giving, then you multiply that by the amount of loan. Right. Contribution to funds, we touched base on this one when we were doing learning unit, I think 2. Right, so we've got the total contributions to pension fund, provident fund, and the retirement annuity fund paid by the employer on behalf of the taxpayer, constituting a fringe benefit. If the employer is paying a certain portion towards your pension fund, your provident fund, or the retirement annuity fund, same applies to the medical aid fund. That portion that they do pay on your behalf, it's called the fringe benefit. But when the employee calculates the deductions for contributions, both the employer and the employees contribute will be deductible. Right, quickly let's have a look at the examples for July Land's employer. All right, say 5.14. I've picked it up from the study guide. Do not hesitate to redo it again. July Land's employer made the following contributions on behalf of Land for the current year of assessment. Contributions to medical aid scheme is 15,000 rand, and then contribution to the retirement annuity fund is 12,500 rand. They're now looking for you to calculate their taxable benefit or the taxable amount. Who want to give it a try? Who want to give it a try for me? Who want to give it a try? All right, so this one is not complicated at all. So what you have to do there, you can't just calculate the taxable income. If you calculate the taxable income, you have to include this under the gross income of the taxpayer. But your answer should be both. See, I just want to remove my underlining. All of the contributions made by the employer so they are all subjected to labor. And that's it. All right. Because I think we'll be left with 2 learning units. So what's going to do is I'll try to move them as fast as I can so that we'll just go back and do these heavy questions that you'll be faced up with. Okay, where you have to calculate, we'll have to go back to the medical aid, unfortunately. We'll have to go back to the fringe benefits, including your pension fund and stuff like that. Those kind of questions we'll have to redo them again so that you should remain with confidence on them. All right, we're now going to get into what's called the travel allowance. Okay, travel allowance, it's actually an allowance that you get from the employer when you are actually traveling for business purposes, or it can be for private purposes as well. But let's have a look at it. It says that an employee will receive an allowance from his or her employer in order to assist him or her paying certain expenses that the employer expect him or her to incur in order to perform certain jobs. The employee will be refunded the amount that he or she spent once he or she provide the employer with the proof that the expenditure has actually been incurred for business purposes. All allowance except for traveling allowance or subsistence allowance and the public office allowance are included in the full employee's taxable income. For discussion of a travel allowance and subsistence allowance will be next. It says that an allowance or advance in respect of the traveling allowance, not for the purpose of business traveling, but for the private traveling purposes, which include traveling between the employee's place of residence to his or her work, the place of employment, or other traveling done for his or her own private domestic purposes, shall be deemed not to have been expended on the traveling for the business purposes. The travel allowance given to an employee to finance the transport, the reimbursement given to employee based on the actual business travel. If you travel for the business, obviously you're going to get that reimbursement. So I've seen it with my previous employer. When we travel, we used to get some sort of a benefit. It was a fixed amount for everybody who is actually traveling. And then we utilize that amount of money when we get there for traveling. But they will book the flight or the business, the company transport, and then we travel there. But we are given a certain amount that we are actually going to spend in there, whether we're going to get food or not. So that whatever that you want for business purposes as part of your expenditure should be covered. The full travel allowance received is not included in the income. Only part of the allowance that remains, if anything, once the cost of the travel allowance for the business has been deducted, it is included. But where employees receive, remember that amount of money just going to utilize it anyway. Where the employee received an allowance for more than what they spent from the business traveling, the excess amount of the travel allowance will be taxed. That's where you're going to include it as part of your income. So the cost calculations of the business traveling will be the actual business travel kilometers traveled, or the cost per kilometers travels, and there are steps to be followed. Number one, the business kilometers travel. In order to ascertain the distance of the person for the business purposes, we have to refer to a notebook. There's a notebook that you have to keep. But in the book, there is a notebook here under the study guide. So in the study guide as well. Right, and secondly, a logbook is used every time the employee travels in his car to record how far he traveled and the purpose of the trip. So if you use the car, obviously you're going to claim the kilometers that you have traveled for. So there's the standard rate per kilometers that the company established, and then you're going to claim that in accordance with that rate. But traveling can only be for private or business purposes. So we're going to be provided with the, all right. This is one thing that I want to explain before I go further. All right, when you are dealing with the traveling allowance, you're going to be given 3 things. The aspect would include you're going to be given 2 things where you have to determine one. So basically you would need 3 out of the 2 that you were given. You're going to be given the total kilometers traveled. or you're going to be given the private, or you are actually going to be given the business kilometers traveled. If you're given the private and the business, it means that you need to calculate the total kilometers traveled. So you just have to add the two. If you're given the business kilometers traveled, let's say again you're given the total kilometers traveled. It means that you're just going to take total kilometers minus the business and get the private. Same applies to if you're given the total kilometers traveled and then the private kilometers traveled. And that means that you have to take the total kilometers traveled and then minus the private to get the business. That's how it's going to go. They can't give you the three. They're going to give you two all the time. You just have to determine one. Right, as I said, the logbook is used every time an employee travels with his car to record how far he traveled and for the purpose of the trip. Traveling can only be for private or for the business purposes. Total kilometers traveled for the year of assessment will give you the private kilometers traveled for the same year of assessment. And the difference between the two values must be the business, what I've just explained now. And the employee who does not keep up the logbook, he will not be entitled to claim any business travel expenditure. His entire travel allowance will therefore be fully taxable. I mean, if you don't have the proof that you have traveled so much, how are you going to calculate the business traveling expense? It's important to keep the logbook. Step 2, cost per kilometers. We can make use of the actual expenses where the employee has kept the proof, or we can make use of the tables that are provided in the Income Tax Act where an employee keeps the proof of all expenditures on the traveling during the year of assessment. So the total actual expenditure will be divided by the total kilometers traveled to give the actual cost per kilometer. Actual cost cannot be calculated where the employee only knows the cost of the price of the vehicle. So here is how it goes. This whole theory, you can just read it firstly like a newspaper, but you are simply going to deal with one thing. It's either you're going to calculate the cost per kilometer, so you're going to use the tables, or you're going to use those three things that I just explained to you just now. Okay, so just be careful of that part. Right, the actual cost would include your fuel, your licensing, insurance fees, maintenance cost, wear and tear. Don't worry about those things. The table will just give you that, or they will just give you exactly what is actually there. Right. So the wear and tear is calculated by dividing the cost of the price, including the VAT, by a limited number of years. It's 7 years. Remember, you need to actually be able to differentiate in between the two. At first, when we calculate the wear and tear for the vehicle to be used, or the cost of the vehicle to be used, it was 3 years, or it was limited to 60,000 kilometers. So, but under your travel allowance, it's only limited to 7 years. Sometimes they can say the cost of the vehicle is going to be utilized for more than 7 years. Do not go with that number of years. If they say 9 years, no, you must just say it's limited to 7 years, all right? But if they give you anything below 7, that means whether it's 5 or 4, you can just use 4, all right? But just be specific and be careful when it comes to that. It's only 7 years in terms of the number of years of limit. You don't go beyond that. The cost price of the vehicle is limited to 595, where the cost of the vehicle is actually more than 595. 595 will be used as the cost price and not the actual cost price of the vehicle. You need to get this part as well. If it's more than 595, tell me it's limited to 595,000 and not beyond, unless if it is below 595. So be careful of these two things. 7 years, it's a limit, and 595, it's actually a limit. Anything beyond that, you just tell me it's limited to 595, and then you use that. But anything below that, you can use it for free. It's fine. There's nothing wrong. So the interest paid where the vehicle is financed. The interest paid where the vehicle is financed. This is the interest. This interest is limited to an amount which would have been incurred had the original cost of the debt has been 595. So if the cost of the vehicle is actually 595, including the interest is fine. But if it excludes the interest and they tell you how much the interest is, do not include that as well. So in terms of the lease payments, where the taxpayer leases the vehicle, when employee does not keep the proof of his actual expenditure on traveling, he can make use of the table to calculate the total cost per kilometers, fixed plus variable. So that's in a nutshell in regards to a theory on the traveling allowance. Before I get to that question, who need clarity? Let me just go back to my students. Neville, are you fine?
Yes.
And Amanda and Dinelle, are we all fine?
Yes.
Yes.
Right. So when you go to your study guide and do summarize your own theory, I can still send you the notes if you do need them. I don't have a problem with that. Make sure that you cut the pieces that are important. Do not cut what is actually not necessary. Okay? If you feel like the theory is confusing you and it does not even add value, leave that out. Look at the theories that contains about 7 years, or the licensing fees and the insurance and all of those, or the cost of the vehicle, which is limited to 595,000. Those are the most important part that you have to capture. Okay, so I'm gonna have to look at this example. It says that Eddie received a travel allowance from his employer for the full year of assessment. Remember, that's full 12 months period. The following information relates to his travel allowance. The travel allowance received for the year is 65,000 rands. Total kilometers for the year is 38,000 kilometers. Private kilometers for the year is 22,000 kilometers. So you can see out of the three things that I've mentioned now, we've got total kilometers travel, we've got private kilometers travel. We do not have the business kilometers travel. You might be, in actual fact, you'll be required to know how much will be the business kilometers travel. So how you got to that is 38,000 and you minus 22,000 rand. It should give you the business kilometers travel. It's easy, right? Vehicle cost 250,000 rand, including that. He kept no record of his vehicle expenses, but did keep the logbook of all the business. That's what we want, basically, the logbook. So the required part, calculate the business kilometers for the current year of assessment. Calculate the deemed cost per kilometers in rand. In this way, you're going to look at the table. I'll tell you which page you have to go for this one. And then you need to calculate the total business cost. And you need to calculate the taxable amount, if any, that needs to be included in Eddie's taxable income. All right, who's got an approach on this? Who's got an approach on this? All right, the table that you are going to need is on page 24. Page 24, it will help you. Sorry, my mouse is freezing. Come on. Right, in the meantime, I would like you guys to actually go to page 24 so that when we do this question, we'll be on the same page. Oh. Just a moment for me. Mouse. All right, anybody who knows how to switch off this mouse that doesn't have a cable, I don't know what do they call it. I want to switch it off and use the I want to use the built-in mouse on my laptop. Who does know that? Because my mouse is giving me a problem. Okay, it looks like it's back now.
Is it the cordless mouse?
Okay, I'm not sure in this IT terminology, but it doesn't have a cable to connect on the laptop. It's just this one that you, I think, can I say it senses?
Yeah, so it has a mini USB, I think, that you connect to so that you can be able to use it. So if you disconnect the USB, then you can't use it.
Oh, I can take out this USB, right? If I
Yeah.
want to. Okay, thank you very much.
You're welcome.
Okay, so this is how you're going to approach the question. First one, they want us to calculate the business kilometers. Okay. Business kilometers. So like I said, when you calculate the business kilometers, it means that you don't have it. So what you need to do is you're going to take total kilometers. Let's say total km. Total kilometers is 38,000 kilometers. Yeah. And the private kilometers is 2. Look at how interesting and easy tax is. So you'd say 38,000 minus 22. Let me just calculate that for you. 38 minus 22, I think is about 16. Right, so business kilometers would be 16,000 rands. So you got your 2 to 3 marks for free. See, it's the issue of copy and paste. So this is your answer, 16,000 kilometers. Easy, right? Okay, cool. Let's have a look at did I cancel the question? Can we just go to, because of only in the guide, but we are going to calculate. Second part is the actual cost per kilometer. See something. Get the information. Actual cost per kilometer. All right, the actual cost per kilometer you're going to look at, remember our total kilometers, we need to bring it on board. Our total kilometers is 28,000 rand, but we're going to look at, we need to calculate how much is the wear and tear. The wear and tear will be from the cost. So you'd say, how much is the cost of this vehicle? Am I actually on the right question? All right, the actual cost is 250. It's fine. It's actually below 595. So you just say 250,000 divided by 7 years. That's the limit. You remember that? All right. The answer would be 250 divided 7, which is 35714. That's your 31315. Sorry, 3535714. Come on. Yeah. Got it. All right, so we are done with the wear and tear. Then we have to look at how much is the actual cost. Actually, I think I'm on the wrong. Hold on for me, just a moment. Just bear with me, please. I just want to check something quickly. It looks like there's some information that is missing. I'm looking for actual. Yeah, okay, let's assume that our actual cost. Sorry, I'm just bringing this figure because I think I forgot to put it there. Let's assume that our actual cost is 12,000. Okay, so its actual cost is 12,000. Okay, then we're getting somewhere now. So basically what you're going to do is you're going to add the wear and tear and the actual cost of the vehicle, which is which is 35. I just need somebody to actually help me there with the additions. If you do have a calculator close by, 35714, and then you plus it with 12,000 rands. All right, total is 47,714, 47,714, and then you're going to divide this by the total kilometers traveled, which is 38,000. Let's say 47714, 47714, and then you divide this by 38,000 and give you R1.25, or 1 comma equals 1,255. 255. Yes, correct. Okay, so that will be your actual cost for kilometer. So it will be 1, 2. We move it to. Let's do this. Just a moment. Right. Let's say 125. 125 cents. Sorry about that. 125 cents per kilometer. Okay. So third question here says that you need to calculate how much is your deemed cost per kilometer. Okay, so this is how you're going to do it. You'll say deemed cost per kilometer. So the deemed cost per kilometer is for you to calculate that you are actually required to go to the table. What, like I said, I think the table is on page 24. Right. Are we at page 24? Like I asked you? Is everybody there?
Yes.
Okay, let's quickly turn to that one is very important. It's a table. Let's go there. I want everybody to have a look at that table. Okay. All right. When you go to page 24, you're going to look at the determined value cost. That's a table from SARS, and then you're going to look at how much was the cost of the vehicle. So you're going to look at the item that where it starts and where it does not exceed that value. So basically, what you will do based on our question, the cost of the vehicle is 250,000 rand, and then when you go to the table, you're going to look at the line item that does not exceed, that's actually ranges in between, or that does not actually exceed 250. So if you can look at line item number 1, it says it does not have to exceed 95,000 rand. It has to be in between 95,000 but does not exceed 190. Line number 3 says 190 but does not exceed 285,000 rand. I think this is where we are falling, because the cost of our vehicle is 250,000 rands. So what you're going to do is you're going to put all of these things together. You're going to have your fixed cost, your fuel cost, along with your maintenance cost. Okay, let me just go there. Fixed fuel maintenance, okay? So this is how you're going to calculate your what do you call it? So you're going to calculate your deemed cost, maintenance. All right, so we're going to look specifically for those figures that match that line item. Our fixed cost is 80,539. So you're just going to put it as it is, 80,539. And then you're also going to look at the fuel cost, which is 128.30 rand. So fuel cost 128.30, 128.30. And then we're lastly going to look at the maintenance, which is 51.60. Okay. Maintenance 51.60. Let me just verify that figure. Okay. It is 51.60. All right, so you need to remember the fixed cost doesn't correspond with your fuel cost, and it does not correspond with our maintenance cost. So we need to convert that big figure into the rands, right? So how are you converting that? You're going to take that cost and then you divide it by the total kilometers traveled. Okay, so you'd say 80 divided by, I think it's 38,000. Please help me if I'm not, I think I've got 38,000 kilometers traveled. Okay, so you'd say 80,539 divided by 38,000 kilometers, right? And it's going to give you R2.11. So that's a conversion there. So that's your first start. If you find this big figure in your, actually it'll always be bigger. You just have to divide that by the total kilometers traveled, and then it will give you that small figure, which is converted into small grains of sand. Right, so moving further afield there, you're going to add them all together to get the deemed cost, total deemed cost per kilometer. So basically you're going to say R2.11 plus 128.3 plus 51.6. So it's 182.01. So the total will be, that's your total deemed cost per kilometer, 182.01. Okay. So that's your total, and this one is your total. So when you calculate the what do you call this thing? Oh, my mouse is freezing again. Just a moment. Bear with me, please. Just a moment. Oh, people, my laptop is showing me flames. It's freezing. Can you hear me? Can somebody just say hi? I just want to check if you guys are still with me.
Hi.
Oh, I'm not sure what could be the problem. My mouse is not being friendly. Oh. I don't think it's my mouse, it's my computer. Let's give it about a minute or so. Maybe it will come back. Okay, I think I'll just talk that because this PC doesn't become franking. All right. The next question was to calculate the business cost. So the business cost, you just take the business kilometers traveled multiplied by the deemed, multiplied by the deemed cost, and then you divide that by the, you're going to divide that by the greater of your deemed cost per kilometer and the actual cost per kilometer. So in this case, we had a deemed cost being the greatest. So what you will do is you will say 38,000 Rand and multiply that by the deemed kilometers. I think we are given that figure there. I'm not sure how much is it. Sorry about that. So what you have to do is you take your business kilometers and then you multiply that by the greater in between the actual cost and the deemed cost. The deemed cost was actually bigger, so you just say business kilometers multiply by, I think it was 16,000, and then you multiply that by 2 Rand whatever, or 3 Rand, whatever the figure, then you total. And the last question was saying that calculate the taxable portion of the travel allowance. Then you take the amount of the travel allowance and then you multiply by the deemed business cost. The final figure that we had from the business kilometers traveled, then you minus that one, and then you're going to see how much will be your taxable portion. And then you are done. And then you're sorted. Anything else before I go further? Anything else?
I was away when you were calculating the deemed cost because I had an emergency.
Okay, no
So,
problem.
but then, unless if ever maybe you're gonna provide a recording, then I'll just play back.
Yeah, no, the recording will be there, but it will take a bit of a longer time. But let me explain it for you. Right?
Okay.
Okay. So the deemed cost, basically you're going to look at how much is the cost of the vehicle, right? So immediately when you got, remember the cost of the vehicle doesn't have to be 5 now, it doesn't have to exceed 595,000 rands. Okay. So in here, I think it was about 250,000 rands. So that's why I'm saying that you need to go to that table in page 24. And then under the table, you're going to match that figure. There are line items where it says from 0 to this much, from that much to that much. But we found ourselves in line 3, where it was making the 250,000 rand. Once you've established that, you've got columns that contains your fixed cost, your fuel cost, as well as the maintenance cost. So you're going to take those amounts. The tricky part there is the fuel cost as well as the maintenance cost, they are actually already converted into cents. It's only the fixed cost that is actually not converted. So what you have to do is you have to take that amount, it's big amounts, no money, and then you divide that by the total kilometers traveled. And then it will give you automatically how much it is rounded or converted into those cents. After you're done with that, you're going to add them. It's just on my PC is freezing. You add them together. And then after adding them together, remember the reason why you have to calculate your actual cost along with your deemed cost is because you need to calculate how much your business cost is. And then by calculating how much the business cost is, you're going to look at the greater in between the actual cost or the deemed cost. So in this question, or in this instance, we found out that a deemed cost is actually greater than the actual cost. And then what we did, we take the business kilometers and then we multiply that by the deemed cost. And then it gave us the business cost calculation. So the end part will be calculate the taxable portion of the travel allowance. So in this case, in this instance, when you calculate the taxable portion of the travel allowance, beg your pardon, you'd say travel allowance, and then you're going to minus that business cost of transporting with your actual cost as well as your deemed cost. And then you sort it.